Hey everybody, this is Casey Stubbs with Replace Your Income with Options. And today I have Simon Severino, the CEO and founder of Strategy Sprints, also a options trader and stock investor who has his own website and research called The Investing Show. Simon, how are you doing today?
Casey, thanks for having me. Hello, everyone.
You're welcome. And it's great having you. So tell me a little bit about your experience with options trading. When did you get started and how have you been able to generate income?
I started with options this January, so 6 months ago. And the reason was it's 12 years that I'm investing, but just buy and hold. Real estate, high quality stocks. I have my definition of what makes high quality. And I was just buying and holding, buying and holding. And at some point I said, okay, this is a great portfolio for bull markets, but I have nothing to protect me during a down market or a flat market. And so I started looking around YouTube, what to do, how to hedge my portfolio. And somebody said, okay, sell cash secured puts. So I started with options, just cash secured puts to hedge my downside. And then January, February passes. In March, I started falling in love with this thing because it's capital efficient, it's more repeatable, and it creates income in this very same month. So I was like, wait a moment, this is even better than my compounding portfolio. And that's when I called you and said, hey, help me really, really learn this thing. This is wonderful. I want to make this an actual main part of my week. And then we started working together every week and tracking this and improving this. And so it's half a year. Result of just cash secured puts is around 10,000 per month. Now, pretty stable. That's 10% of my account or 9% of my account. That's the story so far.
Okay. Well, that's actually pretty impressive. So I would like to ask a couple questions, get into some details on how you've been able to do it. So what would you say was the biggest changeover from going from a buy and hold and just being a regular investor to an options trader?
I'm a fundamentals guy, so I'm good at valuation of something that has cash flows and earnings and has competitors. This is where I'm good at, and that's why I felt at home the last 12 years doing that. I still feel at home there. But what I learned now in this options journey is capital efficiency and the probability of profits. So if I can create an environment for myself where I have micro wins every week versus I have to wait for 20 years to win, where would you rather live? I would rather live in an environment where I can create micro wins because that gives me confidence, gives me repeatability. So the first one is capital efficiency. The second one is repeatability. And the repeatability comes from going to discretionary investing to systematic trading. So when I buy 20 shares of FICO, I don't know if I am right because it's just one buy and I have to wait 3 years to know if I was right. That's discretionary. But when I sell puts, I can sell 10 per day. And now we have a spreadsheet with, 200 trades right now. So that's not discretionary anymore. Now I am systematic. And as a CEO, as a business coach, systematic is 10 times better because now we have data. We know that there is a 70% chance of winning that trade. We can see exactly how many times we're losing and how many times we're winning. That's what I love about it. And there is one more thing that I love about it. So first, it's more objective versus these subjective valuations and weight. And the last bit is it's completely independent of any other person. I can do this at night when my kids sleep. I can do this just on my own. I don't have to ask anybody. And in my main business, when I sell a big deal, there are 7 people involved and purchasing department. In this, there is 0. I go end to end on my own. It's just me in a spreadsheet. So the introverted Simon loves that because it's just me on my computer, nice big screen, click, click. It's like Sudoku.
Yeah, no, that's really, really great too, that it is just you. What would you say about time commitment? Because one of the big things that I'm trying to really promote, we talk about freedom income, but it's not just financial freedom, but it's also time freedom. A lot of people that get involved in the markets will obsess over every minute that the market is open. And so I try to tell people, okay, this is going to take an hour a week as far as making trades, adjusting trades, selling your options. What would you say is an accurate amount of time that you're putting in? And is that just because you want to? Do you feel like you're putting in a little bit of extra? You enjoy it? Like, talk a little bit about that.
I put in much more than the minimum because I'm having fun with this. But if I had to put in the minimum, in January, it was full-time learning, reading books, watching videos. It was full-time. I think every time you start a strategy. So my first strategy was selling cash secured puts, 45 days out, 0.3 delta. Learning that strategy took me a month full-time. But then applying the strategy is really 10 minutes per day. I open up my broker, 10 minutes. I have my watch list. I see what's most liquid. I click, 45 days, 0.3 delta, done. I document it in the spreadsheet. That's it. And I look at the positions open. Which one can I close? Are they at half profit? Are they at 50%? Then I close them. Are they underwater? Wait. Are they at 10% profit? Wait. Pass by tomorrow. That's it. It's a 10 minutes spreadsheet and broker exercise.
So basically, you just check in to see whether you need to take your profit or enter additional trades.
That's it. Yes. Can I take profits or not? Can I free up some buying power or not? And it's really 10 minutes per day because I like it. But I could do this actually with 10 minutes per week either because I sell out 45 days. So I just pass by often because I really enjoy it.
Right. Yeah. And there's a couple of things you can do to save your time, like putting automatic profit targets so you don't have to check in and say, do I need to close this? You can actually have it automatically closed, things like that. So that's been great. And so what would you say to somebody who isn't in the market? Right? Let's say that maybe they don't even have a lot of cash flow, or they're working a lot of hours and they need additional cash flow. What would you say to someone in that situation?
I mean, my experience is that 9% can be done 3 months in a row. So I'm not yet in a position to give advice like you. You can ask me in a year when I've done 12 of these months in a row, but I can share my experience, right? January I started, I didn't really document it, so I don't know what happened in January. February I started documenting, but I was documenting the wrong stuff. Then Casey helped me document the right stuff. So from March on, we were properly documenting. And now we know that April was a 5K, May 10K, June 10K, July is right now 9.5K. In August, we are in July, but we have already visibility into August with 8,700. Half of that August will actually materialize because we will close it at 50% profit, but that's another 4,000 that's coming in. So what I love about this is I now know my number. I can make 10K per month. And I know that at this pace, that 10K will pretty soon be 15K. And then next year it will be 20K. That's what I need to know, right? It's predictable, it's repeatable, it's not discretionary, it's now systematic. There is a science part, not just an art part to this. And there is an objective mathematical part, which is quite calming and relaxing. It's like making Sudoku, right? I don't do Sudoku. My kids love Sudoku. It calms them. And this is my Sudoku.
Yeah, that's that's good. With the fact that you're seeing consistent cash flow, which is really why I try to get people to do this, because in today's world, where the way things are, it's really not possible just to make it with a job, right? I mean, that's just the truth is no matter who you, unless you're, I mean, doesn't, unless you're really on the top 1% of pay, it really just doesn't make a lot of sense. And if you are in the top 1%, you want to do this anyway. So it's nice to be able to have that consistent income. With that being said, what do you think about on the risk side of things? Like, since you've been doing this, we would say you've been at it about 6 months. And how do you feel doing it? Do you have any concerns about risk? Are you afraid that there could be a downturn, and how are you actively managing against that?
There is more defined risk than undefined risk in this strategy. So far, cash secured puts feels less risky and is mathematically less risky than my compounding portfolio, where I just buy Amazon and hold it. So because the risk is defined and because the duration, so I have 45 days to be right once. I don't have to be right all the 45 days. One of these days needs to be above 50% right, and I take it out. So it's defined risk. I have more time to be right versus, days that I'm wrong. I can be wrong 5 of those days, but then the 6th one I'm right, and I take it out. So the risk is much lower, and you can do it part-time in addition to a job and in addition to a compounding portfolio. Because most of my day, I'm a father and a CEO who runs a business. And then, on the side, a little bit of compounding and a little bit of income portfolio feels less risky to me.
Right. And so for a guy like you're a married man, you've got a family, you run a business. So it's not like you don't have a lot to do, right? So right off the bat, this is great because it doesn't take a lot of your time, and it's like kind of like a little hobby. It's therapeutic. It's something that you can enjoy. And so so far you don't really feel like there's a lot of risk. And the way that I would add to this, to what you said, is that even when you're wrong, which we really try not to get to this point, but even if you're wrong, the worst case scenario is that you're buying the stock at a discount, right? So if Amazon is trading at $200 and you're selling the put at 190, you're actually getting assigned 45 days later, you're getting Amazon cheaper, and they're basically paying you to buy the stock. And so that on the risk side, it's like, okay, I don't mind owning Amazon, right? So even if I'm wrong, I get to keep the credit either way, and I don't mind it because I know that it's a great company.
Yes, the worst case, I get assigned, and that's what happens in my compounding portfolio. I have to hold it. So for me, the comparison is not doing nothing with that cash, which of course would be less risky. But my comparison, what else would I do with that excess cash? I would put it in the stock market. And that is higher risk and lower capital efficiency. And there is more subjective elements because you have to assess the quality of a moat. Is Google's moat going away because search has now competition? That's far more subjective than selling a cash secured put on Google 45 days out, 0.3 delta. It's more objective.
Right. Yeah. So with your experience so far, and you have mentioned that you're relatively new, we happen to go through one of the biggest drawdowns in the last 100 years. Because of the beginning of the year, there was a lot of uncertainty regarding tariffs, and this is, a huge drop in the market early in the year. February, March, April was, I believe, if I look at the numbers, it was the third biggest. COVID was bigger, and maybe the one in 1987. So with that being said, how did you do performance-wise Did you still make money when everyone else was losing money during that big drop?
It was fascinating because the VIX spiked to up to 60, which happens rarely in history, right? And so my compounding portfolio was just down for that month, like the S&P. The whole market was down. My compounding portfolio was down. This one that I call the income portfolio was down too, but because the VIX was at 60, the premiums on selling cash secure puts went up by a lot. And so I sold even more in that month. I sold even more cash secured puts. And that made May a $14,000 profit month. So it was the strongest month with the highest volatility, because volatility becomes your friend in an options portfolio. And that's why I started it as a hedging, as a downside protection. And what happens now is I have two portfolios, right? The compounding and the income portfolio. When the VIX is down, the compounding portfolio does better. And when the VIX is up, the options portfolio does better. So overall, I'm standing on two legs now instead of one leg. And so overall, I'm de-risked, I would say. And I've decreased my overall volatility and my overall risk, because one of them is doing well at any point.
That is pretty amazing. And so what's so interesting is that when the volatility goes up, you're earning more money when you're selling. And so when the timing is good, which yours was, you're actually making more money in a down market, which is phenomenal considering your compounding portfolio, your investment portfolio is down so much. That's absolutely remarkable. And when we also add the fact that you're always making money with this, it's almost like it never stops, right? Because as soon as you close one trade, 5 minutes later, you're selling. It's like you've always got something. It's like you're a store and you've always got something to sell, and you're redoing your inventory, right? Okay, I just sold this. Now I need to get more inventory. And so that's where the compounding kicks in. And so have you been able to notice that the more that you're trading, the more trades you're able to make and the more cash flow you're seeing come into your account?
Yes, definitely. Because as the account grows week by week automatically, and by doing that, now I have more buying power. With more buying power, I can set up more trades. I have 10, 12 trades open at any time, 10, 12 underlyings. It's more contracts than that. It's maybe 30 to 50 contracts at a given time, but 10 to 12 underlyings, mostly stocks and ETFs. With more buying power, I can just do more of them. But also now, after 6 months, you told me, Simon, you're now graduating from just cash secured puts to the more efficient ones. And so I'm learning the next thing now. Will take me more dedication over the next week to learn the more capital efficient versions, credit spreads. That's what I'm learning from you this week. And so over the next weeks, that will be the next learning curve to add those that are even more capital efficient.
Right. And I love how you've been very patient and not like too greedy. One of the things that people do, just I'm sharing this for you and also for everyone that's listening, with credit spreads, there's a little bit more risk involved, but because there's a little bit more risk, you can make more money. And so people get a little bit excited about it and they start acting recklessly, right? And so you've taken your time. You haven't been like, okay, I need to blow this thing up. I need to make $1 million. You've just been very consistent and steady. And so the way that you're proceeding is really great. So now you're going to credit spreads, but you're going to manage your risk really well. It's going to give you an increased profit because you're doing it in a way that's not like reckless, right? So it should work really, really well.
We'll see. Right now, I'm just utterly overwhelmed by it and confused. But let's talk in a year again. I'm sure it will work.
Yeah. So on that note, that's when I want to talk about my commercials. So for everyone that's listening, and if you don't have a second stream of income, you really should consider trying out our Replace Your Income with Options course, because it's a great way. It's safe, it's secure. It's a very affordable way to create a second income. And like I always say to the people that are signing up, is that this isn't a course. Nobody needs another course. There's 1,000 courses, but what this is a transformation. It gives you the ability to have a freedom and a second income. And that's really what everybody needs. People don't need another course. We're just taking the course so that we can learn these skills. And by the way, I am there to help you every step of the way. So check that out in the link in the description. So now, Simon, I want to talk a little bit about what you've got going on, because you're very successful in business and you've taken that same level. So I'm just going to use it as a disclaimer. Anyone can do this, not just geniuses like Simon. Anyone can do this, but you have taken the same professionalism that you have in business and you've applied it to this. But tell us a little bit about what else you got going on in business, and also some of the new things you're doing in the stock market as well.
Yeah, the main business strategy sprint is consulting method to accelerate sales for businesses in finance, consulting, and technology. And so we optimize their sales processes, they make more money, and part of that also we make more money. That excess cash per month, 12 years ago, I started putting into stocks. And first year, obviously, I just did what somebody on the internet told me, or some buddies told me. And so I was taking bad decisions, obviously. And so bit by bit, I learned fundamental analysis. And with fundamental analysis, I started understanding what is a strategic advantage, what is a moat, what is a defendable position. Why isn't growth enough for a stock? But why do I have to look at its efficiency? And efficiency also not as a static ROIC, but is the efficiency increasing over time? So I look at the ROIC progression over time. If you put $1 into the business, does it make $1.5, and then next year $1.6, and then next year $1.8? That's a ROIC trend.
Just like in options trading.
Yes.
You put $1 in options, you get 1.5 back.
Yes, capital allocation is exactly that. It's the return on invested capital. And that's what CEOs do. And this is what you have to look for as a shareholder. For example, Robinhood is growing so fast right now. Should I invest in Robinhood? Nope, because it hasn't the ROIC trend that a Google or a FICO has. And that's fundamental analysis, right? And you see momentum, but you see fundamentals. And there I look at mainly at ROIC trends, because over time, the stock price, and when we say over time, that's 3 years, 5 years, 10 years. Over time, the stock price follows the ROIC trend. So this year, I don't know what any stock does. Nobody knows. But if you want to know what it does in 3 years, you look at the ROIC trend and then you know a direction. And so that's what I do as a stock investor. And I have both a blog about it where I do deep dives and valuations and share my portfolio. It's called The Investing Show. And there is also a YouTube channel, also called The Investing Show, where I show those analysis and those valuations.
And the links to all of that is going to be in the description. So I recommend you check it out. And I am subscribed to Simon's blog. I really love his research, and I use it for my trading and investing because it's just so well done. So thank you for that. And I just love the fact that you rolled out some of your Bitcoin, as well as you had done with Bitcoin, that you rolled that into options. And how do you compare the Bitcoin holding to the options trading?
Well, I was lucky with Bitcoin because there is nothing fundamentally to calculate or to analyze about it. It's like gold. You can say, okay, it's a bet against the dollar. If people bet against their government being unable to stay in the budget, then they buy gold. What I thought is, okay, Bitcoin is the new gold. But that's not a thesis. You remember in the beginning we said discretionary investing versus systematic investing. That's not systematic investing. That's gambling. And so I gambled on Bitcoin. I was lucky. Now 400% later, I'm sailing out. Of course, this could grow higher. All the power to you. Go for the moon, guys. That's not what I do. I look at risk-adjusted returns. I'm scaling out, and I'm putting all that into the options portfolio because that has more objective reality, right? And will I miss profits? Yes, 100%. Can I live with it? Yes, very much. The one positive side effect of being so boring with my system is that now large funds, not just hedge funds, but also large institutions that invest very large sums of money for families, they have subscribed now to the Investing Show because they like that conservative approach. So it has also positive sides.
Yeah, you've got some big goals on there. I was looking at your website. You're really looking to grow that fund, and that's very exciting. And I think you're going to do it because you're a guy that accomplishes goals. But I just want to thank you for being on the show. Really appreciate you sharing your experience with options, mainly because I'm on a mission to replace the income of 100,000 people with options. And the more people I get on the show sharing their experiences, the more confidence that others will have to follow in your footsteps. And so I'm looking forward to having a lot of other successful options sellers in here sharing how they've replaced their income. But I really thank you for taking that step to do that, Simon.
Thank you, Casey, for showing up for your community day in and day out.
Okay, well, that's it for this episode. We'll see you on the next episode.